So my name's Elliott Goldenberg. I work for MasterCard. I'm here today to talk to you about the future of payments, which all sounds very lofty, but we'll get more into that as we go through. I work in the digital payments team at MasterCard. I look after the market development team across the UK and Ireland, and it's our role to work with our product team to work with our technology as we develop it, make sure it's embedded within the payment ecosystem, and then we work with our partners, that's issuers, acquirers, merchants, to start to bring some of those use cases to life, and I'll share some of those with you as we go through this deck. So, an interesting headline. So let's start by going back about 25 years. This was a newspaper headline in The Sun. Seems remarkable, right, in this day and age that such a headline could be written, and I'm pretty sure you couldn't have got that any more wrong if you had tried. The internet continues to influence many aspects of our lives. It changes the way that we interact with our friends, our family, our work, and even brands. We consume media, content, products and services at a greater rate than ever before, demanding more choice, faster delivery, and this creates a very interesting and diverse ecosystem of entrepreneurs and startups that work very hard to create interesting user experiences that sit on this remarkable platform that we know as the internet. We talk, or I hear lots of events I go to, of people talking about being on the tipping point of a payment revolution. And I think that's a little misleading, to say the least. I think it's fair to say that we're experiencing a payment revolution or evolution, depending on how you want to call it. But the notion of a tipping point, I somewhat disagree. I think that leads people to believe that we're almost there, that we now know roughly what this new international, global, digital standard of payment acceptance is going to be. It's VHS or Betamax. And the truth is, you couldn't be any further from that right now. Every day we experience more fragmentation. The FinTech space is an incredibly crowded and exciting one that leads to that fragmentation. And this global race for ubiquity, and we're in that race, is further than ever before. Companies like PayPal have had an awesome head start, I think it's fair to say, probably 10 years out the blocks ahead of everybody else. But it's my opinion over the next 5 years or so that you'll see other brands, MasterCard being one of them, start to eat away at that market share and start to make a play for this incredibly interesting and exciting space. So, recent history suggests that it has very little respect for the size or scale of an organisation. And I think this quote really sums up the environment that we live and work in incredibly well right now. If we can't be adaptable to change, there's every chance that our businesses will suffer. That another business, whether it come from a FinTech space or another, will grow strong and will start to eat out of our market share. I'm sure everybody in the room remembers Woolworths. EMI Music is another incredible story to talk about. EMI Music actually were the godfather, excuse the pun, of the record label business. They were an enormous global organisation with offices in every corner of the world. They represented stars from the Beatles to Michael Jackson. Yet because of their inability to adapt to the internet primarily and adapt to that change, they literally no longer exist. And it's a remarkable statement. Same with Woolworths, and there's various other examples of this that I'm sure we're all aware of. So what does that mean from a payment perspective? Well, put simply, everything is becoming commerce enabled. We are starting to move beyond the smartphone. Pretty soon we'll have smart cars, and they will pay for our parking and our toll roads, probably pay for our drive-throughs, parking tickets maybe. We'll have smart watches, we already have them, but the smart watches will probably start to do things like order a new pair of running shoes once you've covered a certain amount of miles. And believe it or not, you'll have smart light bulbs that will be ordering replacements before they even blow. This is the reality of the world that we live in. this digital convergence dramatically changes how businesses relate to consumers, and more importantly, what consumers expect and demand of those businesses, both in a physical and a digital world. It's opening up opportunities to create better and safer ways to pay around the world, and it's for that reason that MasterCard are committed to developing our technology to remain relevant in this space beyond plastic. If we look at some of the numbers, just by way of trends with mobile and tablet, they're staggering, right? And you'll see slide after slide with numbers, anything to do with the internet and online trade and convergence, and they're all the same. Numbers will be different, but they're all absolutely huge. And as more people move from a disconnected environment to one of being constantly connected, it's clear that this digital shift is becoming the most significant payment milestone since the introduction of plastic cards some 50 years ago. So it's clear that innovation is key, and we see this coming from a variety of places. Innovation for innovation's sake isn't going to cut the mustard anymore. It becomes bland, it becomes boring and dull. The art to creating a successful brand that has adoption and usage and scale and ultimate value is to create solutions to problems that consumers want to use. There's 4 brands on this screen, we'll all be aware of them. They're 4 of the biggest brands in the world right now. 2 of them aren't even 10 years old. One of the most fascinating things about them is that none of them have any stock, any inventory of any kind, yet they are the darlings of the stock markets around the world. Uber started, I think, in 2008. It owns 0 taxis, yet it's the largest taxi company in the world. If Boris Johnson declared tomorrow that Uber wasn't going to be allowed in London, people, human beings, presumably with a brain, would demonstrate. Right, that's the scale of adoption and usage and followership that they've managed to create by developing this layer in a very, very short space of time. Airbnb, 2009, bigger than the Marriott Group. It's remarkable. A company that was created by 3 men renting inflatable mattresses and providing Pop-Tarts instead of a minibar has created a brand in that space of time that's bigger than Marriott and any other hotel group in the world. So that previous slide about being able to adapt and change in this digital environment is absolutely key. Facebook is a very well-trodden path. I'm sure we're all familiar with what they do, but you know, they own nothing, yet they're the largest distributor of media and content that they don't own in the world. And Alibaba, probably the oldest one there, I think 1999, has become the largest retailer in the world. And again, all of these brands focus on the experience over the payment. No one wakes up in the morning saying, I can't wait to pay for something. No one cares about the payment. We want stuff. Think about what I was saying a slide or 2 ago. We want more stuff than ever. We demand more than ever. We want it quicker than ever. Not interested in how I pay for it. I want it as quickly as possible. I want to be able to pay for it as seamlessly as possible. Uber have certainly raised the bar from a consumer experience perspective in terms of how that works and how you're not even aware that you've paid. It's just happened without you even knowing about it. So true scale comes from creating a proposition or innovating in this space in a way that solves a customer problem, and that's what ultimately will drive you great followership, adoption, usage, and success. If you think about it, we're kind of going a full circle. In the olden days, maybe not that long ago, we had milkmen. I mean, I don't know if anyone's even seen a milkman lately, but if you were up early enough or home late enough, you'd hear milk floats whizzing around the streets, right? And milk bottles clanging along as they went. And you had an entire nation, the entire industry of individuals that provided an incredibly local and personal service. They survived and thrived even on providing a service that was local, personal, yet they don't exist anymore. With the emergence of out-of-town supermarkets, this move to mass convenience and cheap prices quite quickly saw disruption to such a degree that these organisations just disappeared off the face of the earth. Other local organisations, butchers, fishmongers, I mean, where I live we still have those, but in many parts of London, for example, these have become fads, right? They become almost fashion statements if there's a butcher in your part of London, and people will pay a fortune for that kind of thing. where we started to go a full circle, if you think about companies like Ocado or Graze, think about Ocado. When Ocado launched, they were another layer, right? Much like this. They were creating another user experience on the internet. They were connecting consumers with a retailer. All they were doing was providing consumers with the option to have goods delivered to them at a time that was convenient to them. That was all they did. But they did it incredibly well, to such a degree that today they're the largest dedicated online grocery retailer with sales of £1 billion a year. It's remarkable. In a smaller space, Graze, who create healthy snack boxes, have also driven demand for individuals that will pay a premium for someone to create a very personalised snack experience and deliver that to their work or their home. So the change that we're now seeing, we think, as we move from disconnected devices to more connected devices, is going to drive a much more significant change and much quicker. Mobiles have changed the way that we live and communicate, and we're in the midst of a global transformation of human behaviour. They've changed the way that we socialise, the way that we shop, they've changed the way that we work. And we're now moving from a model where everything was connected to a model where everyone was connected. We're now moving to an environment where everything is becoming connected. So in this new environment, MasterCard and our role is to make sure that people can continue to pay for things quickly and easily. And to do that, we need to solve for two specific things: experience and safety. So from an experience perspective, like I said about Uber, people aren't interested in paying. They need this stuff to happen really quickly and easily. So it's our role to work and try and make it easier for consumers to buy things without necessarily having to put long card details in. As we move towards an environment where more and more devices are connected, more of those devices don't have a keyboard associated with them. It's going to get harder and harder. People manage to make do with mobile phones and entering long card digits. It kind of works okay. But as you start to move into watches and cars and various other connected devices, it's going to become harder and harder. So that's one thing that we need to solve for. And for that, we have a variety of technology. The main one for us is MasterPass, and we'll come to that. The other one is security, incredibly important to MasterCard, incredibly important to consumers and everybody in this room, I'm sure. Data is showing that fraud is on the increase from a card not present and an e-com perspective, and whilst we make things easier, it's also really important that we make things more secure. We want to make sure that people aren't storing sensitive payment information on handsets, and where they do have to, Apple Pay is a great example of that, they've done so in a safe and tokenized way that means that if the handset was to fall in the wrong hands, that no one can do any harm with it. So the two most important pieces of technology that our company has developed over the last 50 years probably is MasterPass and MDES. So MasterPass is our digital wallet, not a fan of that as a phrase, we'll call it a container. It's a safe and secure place to store your debit and credit cards, your loyalty cards, your delivery information. It's agnostic, so you can put your Barclaycard Visa in there, you can put your Amex card, you can put whatever else you like in there, and it works very much like a PayPal does, but without the charges and without the step-through process. MDES is equally as groundbreaking for us. It's our tokenization platform, MasterCard Digital Enablement Service. We love an acronym. And it's the technology that sits behind things like Apple Pay and Android Pay. It's what allows our card details to be tokenized and digitized and be able to use in that safe environment. So, the next few slides, I've got some examples of how we brought that to life. What I might do is change it up a bit and show you a video beyond this one as well, because I think it's a nice way of bringing a variety of some of the things that we're working on together at the same time. So, is anybody in the room familiar with Pay at Table as an industry or a concept? Okay. So Pay at Table for us, we launched Pay at Table last April, nearly a year ago now. It's been available probably for 2 or 3 years. So for those that don't know, this is similar to the theme I've been talking about in terms of a layer in between. This is a layer that allows consumers to check out of restaurants quicker without asking for a bill. simple terms. The bill appears on your phone, you pay for it using that, you don't have to hang around for a bill. Concept was introduced, in fact, PayPal were the first ones that tried it with Pizza Express, probably around 2009, 10 maybe. The problem with the way that they've delivered it was that you still had to ask for a bill. MasterCard, we have an R&D facility based out in Dublin called MasterCard Labs. We have labs in every continent in the world now. And one of the commerce platforms that Labs created is something called Quicker, QKR. In Australia, Quicker is enabled in schools. It's a very simple platform that enables parents to use their smartphones to pre-order and pay for up to 2 weeks' worth of school meals for their kids. And for anyone with children, you'll be familiar with the amount of paper that comes home in their book bags and school bags appertaining to photographs or swimming lessons or bits of uniform. All of that stuff now gets fed through the app and you pay for it in a really seamless and easy way. MasterPass is that payment acceptance piece that links that up. In America, we Quicker enabled the Yankee Stadium, big baseball stadium out there. We trialled with 250 seats in one corner of the stadium and one franchise. The idea was that you came in with your smartphone, you opened the app, you scanned into your seat to check in so everyone knew where you were. Well, I say everyone, the franchisees. You ordered your beer, hot dog, popcorn, and it was delivered to your seat. It was incredibly successful. I think we're up to 25,000 seats now in the Yankee Stadium. They charge more money than they did. The business model's changed a bit. They've got more people running around delivering stuff because guess what? Turns out it's quite convenient to not have to get up in the game and have beer constantly delivered to you. It seems to work quite well. So in the UK, we were actually approached by Wagamama probably about 2 years ago now. And Wagamama came to us with a specific problem, which is a problem that is very broadly acknowledged in the casual dining space, which is it takes my customers too long to leave the restaurant from the moment they've decided they want to pay. And Wagamama average visit is about 45 minutes, and they reckon it takes between 12 and 15 minutes between a customer saying, I want to leave, to actually leaving, which can be a disaster. If you're out with your wife and your kids and they've finished and they want to go, they're going to go. And it's not much fun for anybody. We've used the same commerce platform effectively to integrate between their POS, their point of sale estate, which is Micros Oracle, which means that when you go into a Wagamama restaurant, you can check in to the restaurant you're in. It will give you a 4-digit code that your server will take. And from that moment on, everything else about the Wagamama experience remains the same. It's our belief and Wagamama's belief and all the other restaurants' belief that this technology is not here to remove human interaction. Far from it. It's there to complement. It's there to give more time back to the servers. If you want to know what a rice curry is, you should still be able to ask what a rice curry is in the same way as you previously did. All this does is connect your bill to your phone, which means at the end of the meal, you quite simply push this button at the bottom, it will invoke MasterPass, you pay, and you're done. We launched it about a year ago. We had incredible success with this. We were trading over 5% of Wagamama's entire estate through this app, which is remarkable. We did some promotions around that with them, and we've really gone to town with pushing this out as a proper commercial model. We've subsequently gone live with Ask Italian. Zizi is now live. Carluccio's are signed up with us. We have 3 sites live now in London, and the whole estate across the country will be live by the end of May, maybe sooner. And we've got Young's Pubs, which will go live at the end of this year. Really interesting use case as well, because, and again, if you think back to all the other examples that we've spoken about, it's about experiences. It's about giving consumers a solution to a genuine problem that make their lives just a little bit better, but then you've got to find a way of engaging with them to actually change their existing behaviour. And we do that by working with some well-known brands and some interesting use cases that give us that the right to do so. Where Young's will be slightly different is that not only will you be able to pay at table, you'll also be able to order ahead, so there'll be certain items that you'll be able to order from the table. But the real game changer for us is that you'll be able to pay for your tab on the app. So the only way you'll be able to have a tab at a Young's pub, and what could possibly go wrong with this, is to have the app. And if more people come and join the app, the app will work out at what point you joined, and at the end of the evening it will do an Uber-like transaction and close out the bill, because I think we have to allow some leeway for people that may forget at the end of it that they have to actually pay. But it will figure out what point you joined and allocate the cost accordingly. So from order at table or pay at table, order ahead, checkout in aisle, it's not a huge leap, right? All of a sudden, technology that's actually available and being deployed will be live in 650 restaurants by the end of this year, not taking into account some others that we'll announce soon. This isn't so far away. In Ireland, we've already enabled coffee shops, in fact, anything within spitting distance of our lab is enabled, to be able to pre-order a sandwich or a coffee. It works with the watch in the same as it works in the phone. It's no longer this huge leap. I talked about tokenization briefly, and I thought it's worth putting this slide in. It really is an incredibly important part of our business and our partners' businesses as we proceed. Without MDES, without tokenization, Apple Pay, Android Pay, Samsung Pay in the US, it's not available in the UK yet, wouldn't have any MasterCard products in there. But it's not just about mobile phones. The tokenization platform is there for things like MasterPass and any other digital wallets. It's to automatically enroll customers into these propositions that make it easier for them, so they don't have to enter a long card detail or take photos, and also so you don't have to remember when your card's expired to go in there and change it, because by connecting through the banks, all of these details will automatically refresh themselves when they are released. I think someone mentioned earlier talking about biometrics and authentications. It's another huge area, and again, in this frictionless environment that we're now moving into, to make things seamless and effortless for people, the better we can allow people to authenticate, the easier it's going to be for everybody. We're of the view that static passwords are not really much good to anybody. They don't really prove anything other than you happen to have a very good memory. So the iPhone really changed things from an authentication perspective with the biometric, but we believe there are other ways of improving on that and creating even better versions of authentication. We recently launched a product called ID Check. The press called it Selfie Pay. But if it works, it's fine, which allows you to authenticate using a selfie. You have to blink, so you can't just take a picture of someone and use it. And it works really, really well, and we'll integrate that with some banks, and they'll use that for things like online banking, for example. Naimi is an interesting business that we acquired in Canada a few years ago, and they actually use your pulse rate, your heartbeat. Everyone has a unique pulse rate. So as long as you're wearing, at the moment it's a wristband, but it's not a huge leap for that to end up in various other wearable pieces of technology that mean the combination of that and your, whatever it is that you choose to allocate as a connected device, will enable you to start purchasing high value transactions contactlessly as well, and safer than before. So we're now moving into an environment that becomes EMV-like transactions where the liability shift exists, and once you get into this space, it's a real game changer for everybody in the room from a merchant perspective. Connected home, so we'll whiz through. I don't know how we're doing for time. I'd like to try and show the video if we've got time at the end as well. But connected home, so CES Vegas, January, we unveiled a partnership with Samsung. We've been working very hard with them to create a connected fridge. People have spoken about connected fridges for a very long time. We've created one, and it's not really just about creating a connected fridge. I mean, this fridge is as big as a bus, right? I mean, it could have its own modem in it anyway, but so the connecting piece I don't think is necessarily so groundbreaking, but there's an app called Groceries by MasterCard. It connects via APIs to two of the biggest grocery stores in the United States, which means that as a consumer, you can start to seamlessly order things, or even select that things are automatically ordered from your fridge as they start to run low. It's an incredibly personal space from a brand perspective to be able to get into there and push adverts and promotions in what's ultimately going to be a very interesting example of a home hub of the next version of connected devices and everything else that goes with it. Same commerce platform again, as Quicker, slightly different use case. Vending's been a really interesting concept for us for a very long time. It's a huge industry, but equally as we move towards a world beyond cash, it's really difficult, right, for people to constantly have change to use the amount of vending machines that are out there. Some have got contactless pads on. The ideal scenario is to connect them to the internet, but to connect millions of vending machines to the internet is a pretty tough task. We've actually created a dongle that you plug in the back, and it's a very cheap and clever piece of technology that ultimately uses your mobile phone as the internet connection to push through the payment. So in the same way as the app I described with Wagamama, you have a similar app that would allow you to communicate with the vending machine, select what chocolate bar or packet of crisps that you want to order. You'll transact using MasterPass and tokenized technology. It will use your mobile phone connection to make that payment, and it will all happen quite seamlessly. That's actually going into launch around Europe and North America at some point this year.
What happens when your crisps get stuck in there?
We'll think of an app for it. So commercial laundry, this is the last one, and hopefully we'll have time to just show you the video. I think it's a really interesting and neat user proposition. Again, it's an example of where I think MasterCard are very good at understanding what we do well, right? We're a payments company, we're a technology company, we're not a vendor, we're not a merchant, we're not a hospitality company. The success of Quicker is down to how we've worked with our merchants such as Wagamama to help us understand how we solve for their specific problem. In this example, we actually work with Maytag. They're the largest laundromat business in North America, and many apartment buildings in America don't have their own laundry machine, so many of them will use laundrettes. And they have a huge problem. From a consumer perspective, consumers will turn up and there's rarely a machine free, so they have to sit and wait, or there are machines out of service because they've got coins stuck in them. And from the operator perspective, they actually had engineers that would start in one part of a city, empty a machine of coins, drive around emptying all the other machines, and then by the time they got back, this one was full again. I mean, it was insane. So we've used the same technology to, guess what, connect the dryers and the washing machines to the same commerce platform that mean you can now pre-book your slots, pay for it, it will remind you when your washing is ready, and you're all done. Simple as that. So I spoke about this transition to digital. It really is the biggest opportunity since the introduction of plastic cards. It is a revolution or an evolution. We are nowhere near the tipping point yet. There's an awful lot of fun and exciting things to happen in this space. And I think MasterCard are in a really good space to make the most of what's going to happen over the next 5, 10, 15 years.